Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, October 17th, 2025, and here is everything you need to know as the markets close for today. The benchmark indices closed with solid gains, marking the third consecutive session of strength ahead of Diwali festivities. The Nifty 50 closed at 25,709, gaining 124 points or 0.49%. The Sensex ended at 83,952, up 484 points or 0.58%. The Bank Nifty surged to a fresh all-time high, touching 57,651 during the session, before closing at 57,612, reflecting strong momentum in the banking sector. Both Nifty and Sensex hit 52-week highs during today's trading, with large-cap stocks outperforming as is typical in the early phase of a bull market. Meanwhile, mid- and small-cap indices slipped marginally, down 0.56% and 0.05% respectively. The Indian rupee closed at 87.93 per dollar, strengthening by around 0.06% from the previous session. Over the past month, the rupee has strengthened by 0.3%, providing some relief to import-heavy sectors and supporting overall market sentiment. Leading the gainers on the Sensex were Asian Paints, which surged over 4%, followed by Mahindra & Mahindra up nearly 3%, Bharti Airtel, Hindustan Unilever (ITC), and ICICI Bank. The FMCG sector was the top performer with gains of 1.37%, while auto, banks, financials, pharma and realty sectors also closed in the green. On the losing side, IT stocks weighed on the indices, with Infosys down nearly 2% and HCL Tech declining around 1% following mixed quarterly results and concerns about margin pressures. Other laggards included Wipro, Tata Steel and Power Grid. The Nifty IT index fell 1.6% and the Nifty Media index was down 1.76%, making them the day's worst performers. In the IPO space, Canara HSBC Life Insurance made its market debut today with a flat listing at the issue price of 106 rupees per share. However, the stock jumped over 6% intraday, reflecting robust investor interest in the bancassurance-led insurer backed by Canara Bank and HSBC. Nifty 50 tested and decisively broke above the key resistance zone of 25,400 to 25,500, which had been a critical overhead barrier. This breakout signals continuation of the positive momentum, with the next resistance levels now placed at 25,700 to 25,800, followed by the psychological mark of 26,000. On the downside, immediate support for Nifty is now placed at 25,500, with stronger support at 25,300 to 25,400. Bank Nifty showed exceptional strength, with resistance now at 57,800 and support levels at 57,000 and 56,200. FMCG emerged as the star performer today, rising 1.37%, driven by strong gains in Hindustan Unilever, ITC, and Nestlé India. The auto sector gained over 1% with Mahindra & Mahindra, Maruti Suzuki, and TVS Motor hitting lifetime highs. Banking and financial services stocks also performed well, supporting the overall indices. On the weak side, IT and media sectors dragged, with technology stocks facing headwinds after quarterly results from Infosys and Wipro disappointed on revenue growth expectations despite margin improvements. On the regulatory front, SEBI's stricter derivatives trading rules implemented from October 1st continue to reshape market dynamics. These include tighter intraday position limits, revised market-wide position limits linked to cash market volumes, and enhanced monitoring mechanisms aimed at curbing excessive speculation in the futures and options segment. No major policy announcements were made today, though market participants continue to monitor global developments and upcoming domestic macro data releases. Crude oil prices continued their downward trajectory, providing a boost to market sentiment. Brent crude traded around $60 per barrel, down approximately 1%, while WTI crude fell to around $57 per barrel. This decline in crude prices is particularly positive for India as an oil-importing nation, easing concerns about inflationary pressures. In the precious metal space, gold and silver hit record highs ahead of Diwali and Dhanteras. MCX Gold December futures surged to an all-time high of 1,32,494 rupees per 10 grams, gaining over 1.6%. Silver futures also touched a record high of 1,70,415 rupees per kilogram, before closing at 1,68,750 rupees, up 0.65%. The rally in precious metals reflects strong festive demand combined with global safe haven buying. Geopolitical headlines remain mixed. Tensions between the US and China over trade tariffs continue to weigh on global sentiment, though their direct impact on Indian markets has been limited today. On the domestic front, there was some noise around US President Trump's claims regarding India's oil imports from Russia, but the Ministry of External Affairs clarified that India's energy policy remains guided by national interests and consumer welfare. This pragmatic stance has been well received by markets. Overall, geopolitical risks remain manageable, with investors focusing more on domestic earnings season and festive demand trends. Looking ahead to Monday's session, the technical setup remains constructive. Nifty has successfully broken out from a multi-week consolidation pattern and is now positioned to test its calendar year high near 25,700, followed by the psychological mark of 26,000. The daily chart shows a strong bullish candle with higher highs and higher lows confirming positive momentum. Bank Nifty is on the cusp of making new all-time highs and could target 57,800 to 58,000 levels if the momentum sustains. Key private bank earnings from HDFC Bank and ICICI Bank, scheduled for Saturday, will be crucial catalysts. On the downside, as long as Nifty holds above 25,500, the uptrend remains intact. A dip below 25,300 would be the first sign of weakness. Global cues will also play a role, particularly any developments on US-China trade relations and updates from other Asian markets. FII activity has turned positive with net buying of around 1,000 crores on Thursday, while DIIs continue their strong support with net buying of over 4,000 crores, reflecting robust domestic institutional confidence. For traders, a buy-on-dip strategy remains favorable given the breakout above key resistance levels and the positive technical setup. Focus on FMCG, banking and auto stocks which are showing leadership. However, maintain strict stop losses given the ongoing volatility and overbought conditions on shorter time frames. For investors, this festive season rally backed by improving fundamentals, falling crude prices and strong domestic flows presents opportunities in quality large caps. Keep an eye on the upcoming quarterly results, especially from banking and consumer sectors, as they will provide further direction. That's all for today's market wrap. Stay tuned for next week Monday's update and send in your questions. Have a great evening and happy investing.